is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 158. You get the Nasdaq up 35. S&P's up 14. Gold contract down $2.50, trading at $12.47 an ounce. We have silver at $14.84 an ounce. Light sweet crude still can't hold price. That's down a quarter, $50.86 a barrel. Notes and bonds are flat. You get the 10-year note flat at 120.08. 30-year bond down 3 at 142.21. Now, both notes and bonds, folks, are coming back into their strength, dramatically lighter volume. Bottom line, they still want higher price, lower yield. King Dollar's up 132.6, trading 97.150. King Dollar's going after this high from November. And you talk about the bull and bear battle out here. It's extraordinary because what we had done is this. On Tuesday, you go up with volume. Yesterday, we get down with volume. You're still hanging at highs. I do expect King Dollar's going to go after and test that high. The euro is at 113.51 to 1 U.S. dollar. The yen is at 113.57 to 1 U.S. dollar. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim. And don't forget, folks, every trading day right here, fast market, great program. You want to understand options, option strategies, futures, all of the above, 11 to 12 Eastern Standard Time. And if you haven't test-driven yet, the Thinkorswim platform, real easy to do. Come over to our website at TFNN, hit the banner, bring it up. They'll let you trade with paper money. I've been using this platform for, oh my God, it's sad when I think back.
Don't tell them. Time is crazy.
No, totally, man. I don't even want to think back like 15 years now. It's like so weird, man. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. Happy Thursday, everybody.
Happy Thursday.
Man.
Happy volatility in the market. Happy grinding higher.
I'll tell you what, Tom. Yesterday's final hour of trading, right?
Yes.
Someone should write a master thesis on uncertainty and what it does to overall markets because as the tension heightened about Theresa May and the no confidence vote, you just saw all the momentum just drain out of the market in the futures on the upside, and just uncertainty came. And then it turned out, it was a pretty overwhelming vote of confidence for Theresa May. And so even though the futures recovered only slightly, it kind of turned them into a grinding trade today. So I thought that was fascinating what happened the last hour of yesterday's trade.
Oh, there's no doubt, man. I was listening to the news when Tommy was doing the news, and I was like, oh my God, it's doing it again.
Right.
The cool thing here, folks, is that when you actually do, well, to me, this is my opinion, okay, but when you're trying to grind, when you're trying to get off the lows, this is kind of how you do it. And I actually really like what happened this morning. Because what happened this morning in the S&Ps, folks, at the open, is that we went into the space that Kevin and I and Tommy are talking about right now, which is this 2647. That was where it got slammed yesterday. It got slammed with 54,000 contracts. It come down there and test it, and thus far it's saying, okay, I don't want to be here. So, it's just like working out. The more that you come down there, the more that rejects it, the higher the probability that, guess what? It doesn't take much buying for markets to go higher after you've been down this heavy. That's, it's kind of, you get down, people freak out. The bull, what's wild about this market, Kevin? The bulls and the bears better be nervous.
Exactly, and isn't that the definition in itself, Tom, of a two-sided market?
Yes.
Right?
Yes.
Rallies fail, sell-offs fail. I think the fact that we hit those 2,600 stop orders a few days ago, and they absorbed it, and then rallied from there, I thought that was significant.
Yep.
I thought that put a bunch of bids below this market. So I just think that, even though it doesn't feel great, this is actually a pretty healthy market we're in right now at some, pretty lower levels than we've been for sure.
Yeah, and if you can look at this two different ways, folks. You can look at the consolidation, the larger consolidation, which would be the highs and the lows. In general, the highs, what I'm talking about is that, going back to September, the lows basically in the last few days. And then you get another smaller consolidation inside that. And that smaller consolidation with the S&P, my take is that's 2,800, 2,815, which is pretty cool, man, because, if you're trading option strategies, defined risk, well, guess what? We know what the setup is. And, what's so wild, Kevin, is that when you have a setup like this, is like, oh, does it really come down to the bottom and then reject it? Which it did.
Sure.
But even being a technical person, when I look at it, he says, man, that is so weird. Like, how does the market know that, right? Do you know what I mean? You come down, but guess what? People feel that they can have their back against the wall. And I think they're right, man, at that point,
You're right. A lot of that is questioning, and right, how can this market do this? But I'll tell you, one part of this that's not really a mystery is when they hit those stops.
Yes.
Right? When they hit that 2,600 stop and the immediate stop orders that triggered, I mean, traders look for those.
Yes.
You could tell standing in the grain pits, the broker who stood there near a whole number and his forehead got a little sweaty and he got a little nervous, you knew he had a stop order.
Yeah.
You knew he had something that was about to get triggered,
Wow.
and guys would look for them. So,
That's
and then
so
buying
cool.
those are when lows get put in for sure.
You got to love it. Well, I can tell you, Kevin, since you've been on with us, we just had the S&P. When we started, the S&P was up 3 points. We're up 17.5 points right now.
Yeah, there you go. I mean, the grind. Remember, when we say grind, everyone should expand the definition of what they think a grind is.
Yes.
Because high frequency and the new markets we're in, the swings are bigger.
Yes.
Make no mistake. They're bigger than, when I was standing in trading pits, and everyone's just got to readjust their parameters for what a little move is, what a big move is.
Yeah. And we are right now, folks, the bottom line is that, well, let me just look at this for a second, because it seems that the range that we're actually trading in is about 35 S&P points on a continual basis. We get the VIX at 21, so pretty wild, man.
The VIX, that's one thing, though, that I think, Tom, if you're waiting for a 14 or 13 VIX to come anytime soon, well, you're going to be waiting until May, April and May before you get anything in that low of VIX. So I wouldn't be holding my breath waiting for any low numbers in VIX.
No, there's no doubt. And, that's when, bottom line, folks, is that, every trading day, 11 o'clock, if you want to understand the different strategies for the actual being of whether you're buying, whether you're selling, inside the option market, well, this is the time to do it, because you can learn more in a fast market than in a slow market. I mean, the reality, which is pretty cool, Kevin, right, is that these markets are moving so fast, is that even if you could be a professional trader, in the course of 2 weeks, that might have taken 6 months before.
Sure.
To see how markets react.
And the basic principle, Tom, is higher implied volatilities bring higher premiums in options, brings higher levels of decay if you're a net seller.
You gotta love it.
He loves that decay.
Yeah, decay. That's right, folks. Every morning you want to wake up with decay on your side, which is where it's at. Kevin, you have
let decay do what decay does, guys.
I like it. I like it. Right here, folks, 45 minutes from now. Kevin, you have a great one, safe one. Have a great weekend. We look forward to speaking to you on Tuesday.
Thanks for having me on, guys.
Thank you.
Kevin.
Stay right there, folks. Tommy and I are coming right back. Dow is up 182. Nasdaq's up 43. S&Ps are up 15. Come right back.
Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow is up 174. We get the Nasdaq up 34. S&Ps are up 13.5. Let's go to our man John in Philadelphia. Hey, John, what's going on, brother?
Tommy, good morning to you both.
Good morning, man.
Say, Tommy, I appreciate your bisecting and observing the precious metals mining equities in past weeks. I wanted to ask you about Agnico Eagle, AEM. Full disclosure, I bought it on that pullback Tuesday. I wanted to ask you specifically two things. One, big picture, is this poised to rally, and if so, to where do you think? And second, more short term, the rally surged into a high Monday, and that was a good high volume 5-day rally. And then it pulled back on Tuesday, and I think that was lighter volume. And on that shorter term, was that pullback into the Tuesday low enough of a pullback to set the stage for an immediate rally higher?
Okay, so let's take a look at it. So you got AEM, Agnico Eagle, the low's 32, the high's 49, and we actually also own this in the gold report, folks. So, you know, when you take a look at this, what we have is this, is that you had the high volume high out here on the 25th of October, right? 4.4 million. Well, we go in that, we go in there with 2.7, 2.9. Bottom line, it's gonna, you know, needs more juice to really get up and really slam the baby. And as we did come back on Tuesday, it was dramatically lighter volume. So my take on this, John, that we're actually going up to this $47, man. And you know, right now we already launched the consolidation that was down there from the August 17th area. 39.86 is a big number. There's no doubt, and it's just making its way through there. And that's the big supply line. So the supply line on a weekly, you got 11 million, 11.7, 9.2. It's going to need more, you know, to get by that supply line. But this is showing, you know, that the equities want higher price. You know, and if
Tommy,
we go,
thanks for that. You know, I hadn't observed that. That's always find I learn something new when I watch you do your chart work. That weekly bar back on that July break with that 39.86 mark, just the top of the bar. That's helpful. That's a helpful benchmark to take a look at.
Yeah.
So, I appreciate that.
And it's acting correctly right here. That's what it's doing. So what happens, folks, is this. When you try to take a supply line out, right, it's going to go up to the supply line, and depending what you want to see, which we got here, we got an expansion of volume. What I've found is that the first time up, you normally never take it out, because it's such a disaster on the way down. But you can see when you're looking at this that the expansion was quite a bit to try to, we went from a week of 5.5 million up to 9 million, and you're still you're at 11.7, but it's a good start. And if we do look, and I know you've been watching ABX, ABX and Rheingold, folks, the bottom line are saying that these equities are going back to their August highs. I mean July highs, because you have Barrick as well. Well, of course, Rheingold is going to go up there because Barrick's buying it at the 6.128 Barrick shares for one share of Rheingold. And this has basically done it. If Barrick can stay over this $14.10, it's going to be a big number, man. Because once it stays...
Thanks. Yeah, thanks for sharing that. Just in the For What It's Worth department, if I'm not mistaken, that merger, that all-stock deal is scheduled to close by end of the year, so in the next 2-3 weeks.
Right.
Perhaps that is a pivotal mark in the performance of the stock thereafter. So anyway, Tommy, listen, thanks so much on that AEM. I do appreciate it.
Okay, man. Have a great one. Have a safe one.
Thanks, John.
So, natural gas.
Sure, let's take a look.
And I thought it was supposed to be cold across the country. Natural gas has been coming down.
Yeah, even this morning in Florida, excuse me, we're up in the 60s. We had been 40s, 50s, right? So Thursday is 10:23. Let's jump in here to come some of the spreads. Natural gas, take a look at where we are. You get natural gas trading at 427. Looking at the January contract. Talk about some volatility, man, even since this morning, right? We just traded at 5:30 in the morning. At 4:06, we're up more than 20 cents in the last, 5 hours.
It's huge.
Yeah.
That's $2,000 in the contract.
Just huge moves. So we'll start it off, let's see. So 11 a.m.s, we're trading at 427. We have 425 with exposure, which is not bad. If you're bullish, so we have two, excuse me. Let's get what this is. So $32 this is costing us, or as it ticks around, now 35 at 482. And you're paying almost a full penny above, where the market's trading at, but not bad when it just moved
not
20.
Bad, right?
When you,
totally.
you look at that risk reward just to pay 1 penny. So that's your bullish spread. That's where you're going to have the intrinsic value. Here's your spread where you're almost 2.5 pennies out of the money, so that's going to be your cheaper spread. Looking at $9. Now, keeping in mind, man, if you're ever just bearish, that's a pretty sweet trade. If you ever think it's going to come back down to we were just at 406, you'd have profit potential down to 405, right? And you're looking at almost a 1 to 20, 1 to 19 risk-reward ratio. And of course, the reason why you're getting that is because you're selling it at 424.5. The market right now is at 427, so you're almost 3 pennies out of the money in terms of where you're trading it. But not bad trades when you have a market that's trading 20 cents. And to pull that chart up again, pretty remarkable.
20 cents in 2 hours, right?
And we were just, and even more ridiculous is that we were just at there yesterday morning. So in 24 hours, we traded down 20 cents and right back up, let alone where we've been. We were just
it's surprising. That's why I said, when I said to you, it's surprising because this morning, that's the first thing I brought up. Well, when I brought up the futures, natural gas was at the top, meaning the most amount of loss inside the Bloomberg. I says, wow.
So I just put this on a daily real quick, and just huge bars, man. Every bar is huge. Look at 30-cent bar. That looks tiny on the chart. That's a 15-cent bar. That looks tiny on the bar. Just huge, let alone yesterday's bar. Look at that, 32 cents in today's bar, about 25 cents of movement so far.
Yeah. Let me bring this up and
go for it.
So if we'll take a look at this intraday. Now, this is going to be a delayed quote, but
all the way in the bottom. There you go.
Look at that. And this morning it was all the way at the top.
Okay. That doesn't take much, right, when you're talking about, because to be at the top, you'd only have to be down 2%.
Right.
And the way natural gas is moving,
Okay, so, 5:30, we're at $4. You're coming into, pull this back a little bit more. It's a tough call, man. And that's why when you have something like this, meaning that it's really like, okay, which way are you going to go? That's where these volatility trades are pretty cool, actually, because it has plenty of room to go both ways. You know, like up here at 450, that's the last time we had big volume on the way down. You know, that being said, you can see that you're coming into downdraft of yesterday morning. That's 426. Yeah, looks like this wants to pop a little bit higher. We'll find out real quick.
Right.
Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials up 167, Nasdaq up 24, S&P's up 11.5. Come right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome, folks. Dow Industrials up 117, Nasdaq's up 9, S&P's up 4, and the volatility in that S&P is just absolutely incredible. All the indices,
Both
actually.
directions, totally.
So let's go take a look at this natural gas number.
So 10:30, the number, stockpiles falling 77 billion cubic feet. Median estimate had been for a decline of 80 billion cubic feet, so pretty close to estimation, slightly off. We'll jump back to the futures market. Here we are, we're looking at 5-minute bars, so pretty close to where we were, right? We saw a little bit of a thrust downward, trading to 425.54, kind of right back up to 427, right where we were sitting at when we were looking at those trades. So we'll see what happens in that market, but not too big of a reaction so far, as it comes pretty close to in line with expectations of what they were looking for.
Yeah, and that's only the beginning, folks.
Right?
Yeah, that's how this thing shakes out, no doubt. Let's take a look at some of the higher volume equities out here inside the equity market. Oh, let's go to GE first. So GE, folks, is up 10% right now.
They're going to have to send that analyst quite a holiday basket.
Oh, this is so cool. So here, check this out. So GE soared as the stock's biggest bear finally had said something about the crisis-stricken manufacturer.
Something positive.
Yeah, something positive.
Important word in there.
Steve Tusla, the JP Morgan analyst who had sell rating on GE for more than 2 years, upgraded the shares to neutral Thursday, as he said the known unknowns weighing on the balance sheet are better understood. It's possible, he said, to note that GE can pull off recovery without another major stumble. I don't believe it, but bottom line...
He's been in bear for 2 years, man. There's been a lot of destruction over those 2 years since he's been in there. I mean, look at that market. Is that the market cap of that chart? Yes, market cap. So he's been short since it's been at 300 billion down to about 58 billion.
Yep. So if we take a look at this, what's going to be pretty cool is this. So your first level here, you got $8.15. You get volume. We get 273 million, and then the next one would be a 957. And what you're going to have happen here, now this is what's going to get really wild, is you're still into this bar from 2009 rather, March of 2009. We'll see what we can get out of it. You know, the low of that bar is 572, the high is 1135, and we hit this is weird, 666. That number in itself is just weird, because watch this. You know, that's supposed to be the devil's number too, but
that's what I hear.
Yeah, watch this. If you pull up the S&P, the S&P actually did this, man. I get this.
There you go.
The low of 2009, folks, 666.79. Isn't that weird?
Watch out for those horns.
It's just really wild, man. I mean, it's like, okay, how does this work? So.
And while we do that, check out natural gas.
Look at that. That was quick.
So again, 5-minute bars. We just traded from 427 down to about 423. We'll keep our eye on that, but volatility in that market, to say the least, coming at you, man. I would have defined risk if I was trading that market. That's one thing
you better.
I would be happy to tell anybody and stand behind, is that you're going to be trading natural gas right now. You don't want to get wiped out. Get some defined risk on your side.
No doubt, no doubt. Let's get over and take a look at those S&Ps. So this is I love how this is actually trading. Even when I was talking with Kevin, folks, okay, when Tommy and I were talking with him, the intraday, when you look at these, this is like the ultimate of intraday trading. And what I mean specifically is this, is that when you always have something to gauge it off of, meaning, you know, the market's been that volatile at highs and lows. So yesterday at 10 minutes to 4, S&Ps, just this one bar I'm talking about, went down 11 points. We went from 2661 to 2650, and you had 108,000 contracts. So remember the number 2650, basically.
Easy. Perfect.
Okay, and we're dealing with 108,000.
Okay.
Okay, so what do we do this morning? Well, first we were up at 2669. You slammed down to 2647. Actually, that one's 52, right?
Yeah.
That's 52. Okay, cool. That's 52 with 52,000 contracts. So that's half of the volume. Now watch. The next one's really important. Then you go higher, and as we go higher, we do 41,000. Now the 41,000, when you take this, the way I do this, I look over and say, okay, what are you coming into there? Well, the 41,000 was coming into 39. So it's like, okay, now you're going to have a shot to go higher, because that's the building cause. What now we have is that it come back down again, and what you're going to see here is that right now we're at 19,000. So the correlation goes like this. let's say if you're just gauging it, you say 19, okay, it's going to do 40, at least. It could do a lot more than that, but let's say it's 40. Well, the 40 is, bottom line, coming into the 52 is coming into the 108. So your probability is, guess what, man? We're going back to upside at 2671.
Yeah.
We'll see how it shakes out. But,
Sure.
That's when you're doing intraday trading, that's a nice way to do it, to really understand where is the supply, where is the demand, where's the force in the market. That's what you're looking for. If we go over, I'm going to skip gears here and go over to the GDX, because what we have had in the GDX, in the gold equities, is that we had and this is really subtle, but we had a nice expansion of volume yesterday. You didn't have much movement, but guess what? You're laying at highs. That was 71 million shares. You're going into 64, 51, and then the biggest bar that it's dealing with right now is that 134. Bottom line, though, you're over it. You're over it. You're pushing into it. If we bring this back and put this on a weekly basis, what you're going to see is that we're dealing with the monster bar that was the week of August 18th, which is $20.41. But it looks to me like you're building cars there to get up and over it. And once you launch this, then you get some real action. And of course, what's going to happen there is that we get a lot of moving pieces inside the euro and the pound and the yen that's affecting the dollar index. The euro can't hold price today. Theresa May got by her own party, but the pound can't hold price. And then if we go over to the yen, we take a look at the yen is at higher. That means that's against the dollar. So what's intriguing here is that all three of those are getting stronger against the dollar. No, weaker against the dollar.
Yes.
And the dollar still hasn't reached a high yet. So there's the yin and yang of, why hasn't it reached a high? Because what you're going to see here, and this is pretty wild, man. I was looking at this morning. It's like, man, this is unusual. Okay, so if we go back to Tuesday, you can see, well, actually, let's go back to Monday. Monday, you're pushing big time with volume. 37,000 contracts. And if you remember Monday, it was hard to tell at the beginning of the day what the dollar was doing. Because first it came down, so like you're pushing down with volume, but what happened, folks, is we closed at the high of the day, so that is pushing higher with volume. So that was 37,000 contracts. Then we went higher, and it contracted to 29. Yesterday, you went lower with 36, and now it's rejected lower price this morning, and that's telling me that we still have game to test that high volume. Well, it's not even a high volume high on the 12th. The currencies, and we can see why. Politically, you can see why for sure,
Yeah.
Stay right there, folks. Tommy and I are coming right back. Dow Industrials right now up 144. Nasdaq is up 6. S&Ps are up 8.5. Come right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow Industrials are up 106. You got the Nasdaq down 4. S&Ps are up 4. Let's go inside this NDX 100 and see the strength versus the weakness. So strength out here this morning. You get JD.com up about 4.6%. NetEase is up 2.3. Shire is up 1.8. Taken away from it on the way down, you got Monster Beverage off 4.6. Mercado Libre is down 4.6. American Airlines is off 3.2, and Electronic Arts is down 2.1. Inside the Dow Industrials, strength versus the weakness out here. Let's see some of these point movers. Okay, so Home Depot's, it's not bad actually. Home Depot's putting 9 negative points, Nike 7, Travelers 5, putting juice into it on the way up. Caterpillar's 24 plus, McDonald's 16, Procter & Gamble 16, Apple 14. Apple, poor Apple.
Yeah, Apple's up a decent amount today, up more than $1.
$2.
Yeah.
Still laying at its low.
Yeah.
It's down from 233.
Quite a number.
Isn't it?
Yeah.
It really is. I mean, it's, you know, let's see, did we hit 163? Oh, this is pretty cool. So check this out, folks. So your high volume out here, this goes back to February 9th, and that's the infamous day, of course, that first the small caps hit February 9th swing low, high volume. S&Ps, NASDAQ, they haven't done it yet, but you can see that the top of that is 163.87. You get 89 million on a weekly, and we hit 163.73.
Yep.
So that's 30.
Made it in there by 14 pennies.
All right, listen, it's and you know, we'll see if that's it. We'll see if that's the rejection. You know,
Yep.
It's a big number.
It is.
It's definitely a big number. And if you go over to the Qs now, this is where it's dangerous. And this is my take that this is a counter trend bounce, but I'm trading the bounce, you know, to the top side right now, because when you take the Qs back, you can see that we're quite a way away from that high volume low. The high volume low in the Qs are 150.
Okay.
And we hit 157.13.
Yeah, we're like 10% away from that, to
Yeah.
put it in perspective. Quite a
And
number.
the IWM, different ball game. You know, if you take the IWM, what you're going to see, the IWM, bottom line, that low is 142.50. We got down to 140, 145.
Yeah.
It's just kind of laying there.
Yeah.
And then if we go over to the XLF, which I think is one of the... This is quite a bit of information here with the XLF, as well as the XLE. You know, the XLF is still underneath it, can't handle 26.76. You're at 24.67. And then the XLE, same type of setup. You're at 63.58 and 64.45 is the number. So it's pretty, it's nice when you basically, at least you have some benchmarks.
Yes.
And you can see where the battle is laid out. Do you know what I mean?
As opposed to before all this volatility started, you just had a straight market up.
Right.
And where do you benchmark anything, right?
You don't, because when I call it in the middle of nowhere, because you don't. It's like, okay, you have nothing to put your back against. There's nothing to basically. When
you're at all-time highs, what do you look at above you, right? You
Right.
can't look at anything.
Right.
And when you've been trading up for 2 years straight, what do you look at below you?
Exactly.
Right? Yeah.
So let's go back to natural gas for a second.
Sure. Yeah. So we get the contract up here. We got some volatility, man, for sure. I mean, there's your 1030 bar, right? Let me get that. 5-minute bars again we're looking at. So, I mean, that's almost a 7-penny bar by its own right. We're at 428.9. It's called 429 almost, down to 422. We're sitting at about 424. And to refresh, we were trading at about 427.5 before that. The contracts were lining up at about 425. You'd have exposure in both directions. But the volatility is persisting. That's the one thing I'd say. I mean, these, every 5-minute bar, it used to take a full day to get 3 pennies of movement in natural gas.
Oh, my God.
And you get it every minute now. Yeah.
Big time.
Definitely.
And if we take a look at the rest of the commodity complex out there, folks.
And we do.
Oh,
we got a guess.
beautiful thing.
Perfect.
Let's go to our man, Mr. Jack Leeson from MajorLeagueTrading.com. And folks, our man, Mr. Jack Leeson, we haven't talked to him for a few weeks because he moved his office. Yeah, it's a beautiful thing, brother. What's happening, man?
What's up, man? Yeah, I guess I missed you guys on Thanksgiving and then kind of lost touch, I guess. But I'm back, and the markets are moving right now. Had some technical difficulties, so I grabbed my other laptop, grabbed my MacBook. But yeah, just hanging out down here.
So, hey,
what
what part of Costa Rica are you in?
It's the Nicoya Peninsula, and the town I live in is called Santa Teresa. It's what it is a surf town, basically. There's a fishing village right next to me.
Yeah.
And I went fishing the other day, caught some mahi-mahi, some bullet tuna.
Oh, sweet.
A lot of good stuff.
Wow.
Yeah.
You gotta love it, man.
Right?
You gotta love
That's
it.
the way to live.
So, we got the first chart we got up here. What is that, gold or the S&P?
S&P we got up here.
Okay, so we got the S&P up, Jack. Talk to us.
This is what I want us to do, although I have downside targets as well. But if we can hold 2653 here today, I think we can move up to 2700 today or later in the day or tomorrow. Otherwise, I'm looking for a move. And these are just smaller levels. The other level I have below that is 2630.5. So basically, if we start breaking down right where we're trading right now, 2654, if we start breaking down below this level, I see us going to 2630.5 here today. Otherwise, if we can hold it, I see us moving up. We have two upside targets. Over the last 2 days, Monday's low to Tuesday's high held its 50% retracement. And then Tuesday's low to Wednesday's high held its 50% retracement. That level is what we're currently trading, 2654 area.
Yes.
You can't really get much bids above it though. So I don't. If you can see buyers are there right now. As soon as they let go, we're going to shift down to that 30.5. So I will look, if we break through 54s, I'll look for a shorting opportunity because that's roughly 20 some points below that I could be catching. So I'm either looking, if we're holding this, I'm looking for a break back above 2670. I think today is going to be a little bit of a ping pong match. And then if we break down below, I think actually that's when we get probably a bigger move here today for at least like 20 points.
Yeah, as we've had a ping pong match in a huge way, there's no doubt these last few weeks. So gold, talk to us about gold.
Gold, so what I'm looking at, and we got FOMC next Wednesday, right? So every time Jerome Powell's spoken recently, gold's been like the best thing since sliced bread. There's some of the biggest moves over the last few months or when Jerome Powell's speaking. I'm actually not sure if there's a Fed press conference next Wednesday or not after
there is. Yes, there is.
There is?
Yep.
Okay, so he'll be speaking. So the first level I'm going to be watching here, and this might trade over the next few days, but I don't see anything major happening until that FOMC event. That's what everyone's going to wait for. I think they're pricing in a 76% chance that they're going to raise interest rates. 1242.9 support level below. I'm looking to take on a first test. So we got that level highlighted, and then 1239.1 below that. So pay attention to both of those.
Awesome, man.
Yeah.
We appreciate it.
And
We just pulled up that beautiful place that you were.
we see where you are now at the tip, at the southern tip, right?
There it is. Look at that beautiful. He's got the view and everything. Perfect.
I like it. Cooking, man. Listen,
Awesome.
you have a great one, Jack. Safe one. Look forward to speaking to you next Thursday.
Adios, guys.
Thanks, Jack. Adios.
Coming right back, folks.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks.
Oh, sorry. There we go.
We have the Dow Industrials up 20, Nasdaq is down 32, S&Ps are up 5.5. Let's just go sneak back and look at those S&Ps for a second. So,
Quite an acceleration this hour.
Yeah, volume-wise, let's put this on 2 days. That'll still give us that. That's good. Okay, so let's see. You got still not enough juice. Hey, we'll see where this shakes out, but that's still it's still not enough juice. You got 35,000 contracts, and you're still dealing with that 108. Now, the kicker here is that that's 2650, and see where we are right now? And we just came down to, what is that?
2645.
2645. So this is going to be the test of that area, and if you close inside it within that 10-minute bar, which is going to be another 5 minutes, that is saying, guess what? Rejected it, and you go right back to 2671. I mean,
huge moves, right?
It's
20 points in the S&P. I mean,
yeah,
0.75%.
Right, $1,000,
right?
$50 a point. You know, both ways. And I expect we're going to see this for quite a while. Now, remember something. The more that this happens, and the more that you actually keep rejecting it with lower volume, the higher the probability that you're going to get a bounce that's going to stick. Because that's kind of just how the yin and yang in markets work. Meaning the bulls and bears are fighting out. If there's enough pressure on the way down, bottom line, we'll see what we can do on the way up. Not enough on the way up. You know, I can tell you, though, for the amount of times that this has already been testing these lows, there's not enough selling pressure. And that would make sense because we were down so fast.
Yes.
That's, you know, it's like, okay, you know, on the 3rd of December, you were 28.14. On Monday, we were at 25.38.
Amazing.
Stay right there, folks. It totally is. Stay right there. We got Fast Market coming up with our man Kevin Hinks and his team. Then we're going to go to our man Mr. Basil Chapman, Steve Rhodes, Dave White. Be back this afternoon. Thanks, pal. I know you're coughing.
Oh, I am? Okay, that's all right.
That's
no, I'm
a
with you.
beautiful thing. Dow Industrials up 52. NASDAQ down 23. S&P's flat. Stay right there, folks. Fast Market coming right up.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.